And on this video we're going to go over a strategy which is a flow-based approach, therefore flowing with the intent that market participants exhibit, specifically over the what comprises the in-play and push now, and how that's likely to keep pushing like as a result of the intent what comprises it, and the style of that interest and intent, how it has contributed to the setup state of the in-play and push. Anyway, this is how I would approach gold. So we'll just dive down and do a random day. Well, anyway, to be fair, actually, no, I've done the whole of December already for this approach, and we had like 2 setups, I think. Yeah, yeah, it was 2 setups. Yeah, so basically, all it is basically, yeah, that's there we go. So basically, all it is the same, like dropping down from the 2 week, or rather the monthly, the 2 week. You and bear in mind with regard to like the monthly and the 2 week, whichever most recently closed, you'll use that. So for example, if it's like the 4th of December, then the monthly and the 2 week close together, right? But if you get the 2 week bar close in the middle of the month, you'll go by that. So here you'd be going by but like even here on this setup, even though it's the 17th, you'd still look at the monthly, but you'd prioritize, or you'd you'd put more weight on the 2 week, right? Because that's like the fresh intent. That's the most fresh, right? Because that closed like, well, I'm not sure, but that closed in the middle of the month. So, I'm just gonna. Actually, no, I better keep my screen like this just so I can see the screen record thing at the top that it's still on, because um, sometimes it doesn't record fully. But anyway, yeah. So like, if like the 2 week it closed, let's say on the 16th, which actually I think it did, and it's poised for bearish momentum to prevail from like the close of the 2 week bar to the low, and then a bit past. Like, yeah, okay, the monthly might still be poised for bearishness too, but like the 2 week bars, like the most recent intent exhibited in like how the next 2 week bars poised to prevail based on the like current makeup of the in-play and push relative to the 2 week. Like that's most recently formed. Like the monthlies, like, yeah, it's still valid, but anyway, you get what I'm saying. So, and then anyway, you'll drop down through then like your array of time frames that you look at. The weekly has as much as importance as the 2 week and monthly, but a little bit less. And then you've got your 4, 3, 2 days time frames, which like are just again a little bit less important than the weekly. So therefore a little bit less than the 2 week monthly. And you'll just go through them and assess whether it makes sense to go on side with the, for example, in this case, the 2 week, which I'm pretty sure was the case, the 2 week, and you'll just verify whether like the intent that the 2 week is poised to see is backed by, for example, the 3 day and 4 day intent that's unfolding. So, um, for example, we'll go down and we'll do this day. So it was the 10th, and then obviously then you drop to the daily, and then you just see again whether, like, for example, what the poise direction is, and then the 12, and then the 8, sometimes the 7 and the 4. But then from the 4, whatever the poise direction is that you've concluded, you then drop to the 15 minute, and then basically as of 7 in the morning, you assess what the most appropriate way would be to see the 15M chart perspective set up like, to get on side with that poise direction, which in this case, for example, will be a retrace of this. high and low, and then a nice bar close. Same with this. So we'll just do the 10th. So it's not like the like higher time frame flow approach, but it's a bit similar. So like you still just going with the facts, but like you're also using, for example, your 12, your 8, and sometimes your 7. Sometimes either 9 and 8, depending on the broker. But if you're using active trades, it would be the 8 and 7, because the 8 closes at 7 and the 7 closes at 6. So yeah, so the 10th, so the 2 week bar doesn't really provide much info considering it closes on the 2nd. So I would just drop to the weekly. Yeah, and also like you only consider the time, like you do consider like the, for example, the time for like the time frame bar closures that have closed, like for example 3 days before, but like in that case, like like the 2 week, it closed on the 2nd and it's the 10th. It's like you kind of want some more fresher data to go based on. So I just usually ignore it and just drop to the next time frame and deal with that. So anyway, here we've kind of got some. If you look at this intent right here, they traded in a pattern which suggests that they weren't willing to continue buying at this region, which kind of makes sense based on how they had already traded, like up to this point where they traded in this fashion, what set this push up in this fashion, and it kind of suggested that from this point they were likely to trade in a way with the prices what were available at this region on this occasion, in a favored side on the bid, and like no interest would be to their buy based on how they had traded like here. And here I just suggested it was likely to keep going. Here through the spots kind of suggested it was coming to an end a little bit, and then here kind of changed again into bearish. And then here it's kind of the same thing. But if, for example, we were to get on board with this trend to the downside, we would definitely want to see some sort of retrace. Like, yeah, to be fair, not even from this high and low. We would probably want to see a retrace at this high and this low. So we'd want to see a retrace if we were to get on board with this bearishness, because this bearishness is not convicted bearishness, that's for sure. So then what I do is I look for the nearest like time frame bar closure to the day that I'm looking to analyze, prior to the day that I'm looking to analyze, sorry. So if it's the 10th, so that's the Tuesday, so we would have this data available relative to the 4-day. It's not really that helpful, but it is kind of a bit bearish, and it then does kind of make sense to maybe look for because like it does actually look bearish. This, like, to be fair, like it pushed the downside, came to an end a little bit. The push to the upside also then came to an end based on this, how they traded, like showing that they were no longer willing to continue trading on the buy side at these prices. That's all depicted in the charts, in the price action what unfolds, which is a direct mirrored representation of the intent and behavior that participants have. That like is the info that's dealt to us and presented to us for us to deal with, and simply and dissect what the reality is of that information. Think about it, like what is the behind that info that's unfolding, and like how is it all, like just all the context, piecing the pieces of the puzzle and putting them together, right? So it's like I don't know the phrase, but yeah, like I mean, for example, like here, this push to the upside kind of looks done from after this bar close. Here, kind of the same thing based on this little selling tail, and this push up to the upside being done. So this is done. Like, of course, ensuing structure could unfold, but that's just extending this pusher structure even more, and it's even more likely to start to see subsequent bars possibly encompass participants' behavior being off the sort of like bearish bias, basically, and being tired or becoming tired of primarily trading with the offer. and continuing to lift it, and no one willing to continue accepting those higher prices and trading in the fashion that would be needed to facilitate higher prices over 4-day time periods based on how the trend relative to the 4-day time period had unfolded. And anyway, yeah, the same thing, it is still likely, but that's a bit iffy to be fair, but I would still anticipate lower from this bar close. And then here, we'll kind of see that, like, okay, this push to the downside may be done. And then here it confirms, and then here I would like to anticipate higher, but it is overextended because this wasn't much of a retrace, was it? But yeah, then anyway, here I was still, it's a retrace is nearing, like this push is nearing being done, aka a retrace is nearing being done, nearing unfolding, and then here a retrace is likely to about here, and the extent of this retrace or the magnitude of it is subject to however participants trade like over subsequent bars and dictate however those bars form in their anatomy, meaning the open, high, low and close. So however participants trade like and dictate the open, high, low, close of the next bars influences and directly affects whatever way the in-play and push is set up. Like, I'm just going to do this as a part 1 and 2 because I really want this to be all sorted because this is good info I'm putting out.